started.
Okay. Then let's call the meeting to order at about 8:32 a.m. And I don't know, how about Jerry? Do you want to lead us in the Pledge of Allegiance? You don't have to stand up with Winston.
Okay, good. Thank you. Ready? Begin.
Yes.
I pledge allegiance
I
to
pledge
the flag
allegiance to the flag of the United States of
of
America,
America and to the republic for which it
for
stands,
which it stands,
one
one
nation,
nation,
under God,
under God,
indivisible, with justice and
liberty
liberty for all.
for all.
And I don't know
Thank
where
you.
I went or why I went, but my screen just went, there we go, dark.
Well, because Judy put a flag up, that was very nice.
Okay.
So are there any public comments on items not on the agenda? Is there anything out there, Judy?
We have no public in attendance at this time, so no public comment. We should take
Okay.
roll.
I didn't have roll there, so yes, go for it.
Okay. So Ms. Shatmeyer.
Here.
Ms. Forrester.
Here.
Ms. Cavanis.
Here.
Mr. Jody. Ms. Smith.
Here.
Mr. Cromer.
Here.
Mr. Shoemaker. Ms. Harris.
Here.
And Mr. Anderson.
Here.
Thank you.
Thank you. So that gets us into the agenda, and agenda item number 1 is discussion and possible action regarding resolution 2022-01, authorizing teleconference meetings pursuant to government code section 54953 in compliance with Assembly Bill 361. That's a long title. I need a motion on that.
Madam Chair, I'll move to approve resolution 2022-01 as presented.
Thank you, Quincy.
I'll second.
Second by Jim. We need a roll call vote on that then, Judy. Any
Yes.
discussion before we have the vote? All right. Hi, Dan. Okay, roll call then, Judy.
Ms. Shatmeyer. I'm sorry. Ms. Shatmeyer.
Yes.
Thank you. Ms. Forrester.
Yes.
Ms. Cavanis.
Here.
Mr. Jody.
Yes.
Ms. Smith.
Yes, here. Oh,
Mr.
yes,
Cromer?
aye.
Mr.
Aye.
Cromer. Thank you. Ms. Harris
Aye.
and Mr. Anderson.
Yes.
Approved.
Thank you. So we may go ahead with our teleconference meeting, and the second item on the agenda is a proclamation honoring the retirement of Katy Richardson. I don't know, Doris, if you want to read that or if you'd like me to read that.
Either way, we would like to take a moment to thank Katy for her 14+ years of service to the retirement system. I'm happy to read the proclamation if you would like, Chair Smith.
That would be great, Doris. Thank you.
Proclamation of the Mendocino County Board of Retirement honoring Katy Richardson for over 14 years of dedicated service to the Mendocino County Employees Retirement Association. Whereas, after over 14 years of exceptional, dedicated service to the Mendocino County Employees Retirement Association and a total of over 26 years of service, of county service, Katy plans a well-deserved retirement. And whereas Katy has acquired a wealth of practical knowledge and experience in the 1937 Act law and processing retirement benefits, becoming quite a historian in the process. And whereas Katy was instrumental in conversion to an automated pension system and improving numerous processes and practices, she saw the retirement system through many operational, financial, and economic challenges and was always a tireless advocate for the association's members. And whereas her years of experience and expertise, Katy successfully trained numerous employees during her time with the association, including 5 different retirement administrators. And whereas Kathy still made time in her personal life to volunteer for the senior center, work in her garden, enjoyed pet sitting, and spend time with close family, friends, and her loving dogs. Now, therefore, be it resolved that the Mendocino County Board of Retirement recognizes and honors Katy Richardson for her service, expressing their heartfelt appreciation for her dedication and commitment to the employees and retirees of Mendocino County, dated January 19th, 2022.
Is Katy with us today?
I asked her to be, but I don't see her on.
Well, that's Jeff put his hands up. I think we give her a big round of applause. We really do appreciate Katy. And I got to know her just a little bit at one of the conferences pre-COVID. And it's always great to get to know the staff a little bit more in depth than just being at the meeting. So Jeff, I want to do what you started. Give her a hand of applause. So
I'm sorry,
I see
Winston,
Sherry
I didn't mean to scare you.
Sherry put her hand up.
And I
That
just wanna
was
say,
good.
we really appreciate Katy, and I know she stuck around longer than what she wanted to help us with our issues, and we're going to really miss her and her expertise, and hopefully she will be around a little bit to answer questions but I know we have, thank goodness we have Doris, who also is an expert in all the benefits, and so but I really want to thank Katy a lot. Yeah, she served the county well.
Absolutely. And Jim?
Yeah, I just wanted a special thanks as well. I was one of those administrators that she trained. And as a matter of fact, it was a time where we were setting up MSARA, and there were so many things on the plate of the board. And as the administrators that served, and Katy was just amazing at what she did on the benefit side of the house. And so I'd just like to offer a special thanks to her, and good luck and best wishes on retirement.
And your life now really begins, Katy.
Yes. Well, that's fantastic. I do remember as a college administrator having my training from the staff that worked for me. So yes, I'm sure that Katy and Judy and Nora and everybody have to help the new administrators learn their jobs. And thank you, Katy, for that. I hear something in the background. I don't know what that is. So I'm moving on to item number 3 on the agenda, the consent calendar. Is there any item that any of you want to remove from the consent calendar for discussion? If not, then we will take that as a consensus that we're approving the consent calendar as is. And we will move on then to item number 5 on the agenda. Discussion regarding the historical benefit review project status report and project updates. So Director Rentschler.
Thank you, Chair Smith. In your board packet is this month's historical benefit review project update. The completion for this month is significantly lower than the past month. The prior month of December or January included a large group that was part of the interest corrections. We're finishing up those this month, and we're making progress on the remaining items that are not interest-related corrections on the project. As you may be aware, MSARA was granted an extension of the compliance deadline, and that is now moved out to April 26th, I believe, of this year. I'm happy to answer any questions if there are any questions regarding the project.
Yes, Trustee Jurdy.
Doris, I think you're noting that there were 3 corrections in this last month. Are you saying that there's sort of a large group that are nearly complete that we'll see in the next month's report?
It'll be in the January, or actually let's call it the February report. I would expect that we'll likely see up to about 500 additional interest corrections, which hopefully will wrap up the rest of that. We'll try to get those processed here as soon as possible. We might break it into two chunks. And then the remaining corrections are part of the original group that was identified for corrections, and they have a variety of different issues, but many of them are purchase related.
Following up on that, yeah, all right, I see that there is no number 18 at the bottom of page 2 that lists the correction description, and there's lots of 18s in December. So that's the interest correction in the spreadsheet that has all the errors out. I'm sorry, Doris, you're muted.
Sorry. Yes, you're correct. I forgot to add 18 to that table when I added the other items in that Excel workbook. I'll update that, but 18 is the inactive interest corrections.
Okay, thank you. Trustee Anderson.
Thank you. Director Rentschler, with the change to corrections 4 and 7 in December, were there retirees who were notified, and was there the need to go back and essentially undo corrections that have been done, or were those all forthcoming?
Except for 1 or 2, all of them were forthcoming, and we have simply just held those while we work out any additional changes in the correction process with the Internal Revenue Service. We're holding off on undoing any correction that had been processed until we know whether or not the IRS is in agreement with the proposed correction methodology. So for the most part, we've just put a hold on it. We did not specifically notify those individuals that the items were held, but we did discuss it at least 2 prior meetings.
Any other questions or comments from trustees? If not, then we will move on to item number 6 on the agenda, discussion and possible action regarding investment matters. And I don't know if Director Rentschler or Mr. Reveles would like to introduce this, or we go straight to Greg and company.
Madam Chair, I have no introductory comments. If Robert doesn't, we can turn it over to the group from Callan.
Fantastic.
Okay.
All right.
Well, wonderful. We have a few guests who are coming in to speak with you today, and they're from T. Rowe Price. T. Rowe Price serves a real specific role within your portfolio. About 25% of plan assets are allocated to international equity. And within international equity, we have a few managers doing a few different things for us. T. Rowe Price manages small cap stocks domiciled outside of the United States. So international small cap securities. And it totals about 4% of total plan assets, or about $28 million. We selected T. Rowe Price to be in this role several years ago. And in aggregate, they've done a very good job for us, beating the index. The last report over the last 3 years here that just recently came out, they're ahead of the index by, over that one time period, by about 6%. So they've done a really good job for us. In the last year, there have been some bumps along the way, and we'd love to hear what they see in the market right now and what's going to be happening potentially going forward as we transition from this environment where we have a lot of stimulus and support to an environment where there's less stimulus, less support, and as we're transitioning hopefully out of the pandemic. So that's who you have talking to you today, and we're just going to hand it over to them and let them tell us a little bit about what they do and what they see going forward.
Great, thanks so much, Greg. Hi, everyone. My name is Eric Cheskin. I'm the primary client service professional from T. Rowe Price. Thank you so much for making time to speak with us today. We really appreciate you guys fitting us into your busy schedule. With me on the call is Jason White, who is our portfolio specialist for the product that you guys are invested in, the International Small Cap portfolio. He'll be reviewing the portfolio with you today, but we also have a special guest from my team, Taham Mahanwali, and he's going to be covering ESG. So we talk to Robert frequently, and Robert said that ESG is a big topic that you guys have been discussing recently. So we thought it would be interesting to kind of share our perspective and our capabilities in that space. So we'll start with about 15 minutes with Taham covering ESG and answer any question you guys have along the way, and then we'll switch over to the portfolio. Greg and team, are we still good for about 30 minutes, you think, on the docket?
Yeah, I think that's right. Robert, is that still? Yep. Okay.
Great. And also with me from the relationship team is Leslie Nettles on the call as well. I don't want to forget her, as some of you have a personal relationship. I think Catherine knows her well. So we're very excited to be here. I'm going to get out of the way and let Taham cover it. Do you want me to bring the slides up on screen, or would you guys prefer to share it on your end?
I think it might be best if you do.
Okay.
Does that make sense?
You're welcome to share.
Perfect. We'll do that. 1 second. All right. Can everybody see my screen?
Yes.
Perfect. Tom?
Thanks, Eric. And just good morning, everyone. First of all, I'd like to thank the committee members and Callan for bringing us here. So we really appreciate your time, and we look forward to this discussion. So as Eric said, we wanted to sort of talk to you about our ESG capabilities and what we do at T. Rowe Price. But before I do that, I just wanted to spend some time on, the definitions of ESG. So if we move to the next slide, there are 3 different styles of ESG investing. And I think the ESG space, as you all know, has grown very, very quickly over the last 5 to 10 years. And sometimes, people refer to us with different terminologies, different acronyms. And so at T. Rowe Price, we've boiled it down to 3 different styles. The first and foremost is ESG integration. This is what we're going to talk to you about today. This is about integrating environmental, social, and governance factors in an investment process. And we think that this just makes common sense. Like every manager, in our opinion, should be doing this because it helps you get a holistic view of the security that you're evaluating as an analyst or a portfolio manager. And it sort of helps you understand whether these non-financial factors will help make or break the company's share price in the next 5 to 7 years. And that is why we think of ESG integration as a capability. We think of it as an extension of our fundamental and research product. And I'll sort of, as we go through the deck, I'll talk to you more about how we do that and how it's sort of paired along with our fundamental research in the portfolios. The other 2 styles are the socially responsible and the impact investing style. So socially responsible, you may know them as SRI portfolios. This is the old school exclusionary portfolios where clients would come to us or still come to us sometimes and say, as an organization, we have certain ethical values that we'd like to put forward in our portfolios. And this is where they understand that those ethical and moral obligations take precedence over financial performance. So think of, exclusionary lists, like a client could say, we don't want any alcohol or tobacco or birth control companies in our portfolios. It's a very value-based investing in SRI. And then the third second part is the impact investing. And so this is, think of it as an extension of ESG integration with a dual purpose, right? So this is an investor going in and investing in companies with the dual purpose of not only creating financial performance, but also creating positive impact in the environmental or societal space. And we've seen impact investing come to the forefront more and more over the past 3 or 4 years. In fact, even at T. Rowe Price, due to clients asking us for this, we've launched 3 impact strategies, actually launched 2 impact strategies. One is in the process. So last year, we launched a global equity impact strategy. Earlier this year in January, we launched a credit impact strategy, so like a fixed income impact. And then the plan is to launch a US equity impact strategy sometime this year as well. So again, the dual purpose of creating positive impact and financial performance. If we move to the next couple of slides, the next slide is just sort of showing you our journey at T. Rowe Price in the ESG space. So we started this way back in 2007 when we hired Donna Anderson as a governance team. Over the years, we've added more resources. And as ESG has proliferated in the marketplace, you've seen better and more data sources that have come in. We've sort of put that all together in a much sort of evolutionary way in the way we think about ESG. In 2010, we became signatories to the United Nations Principle of Responsible Investing, or UNPRI. And since then, every year, we have to submit to UNPRI on how we are integrating ESG across our equity and fixed income platform. So if we turn to the next slide, you can see that UNPRI's rating system, every year it sort of assesses portfolio managers and investment teams and at T. Rowe Price. And this they do across all the signatories for UNPRI. And I'm proud to say that T. Rowe Price has achieved an A+ rating across all single categories that UNPRI sort of assesses us and other peers of ours in the space. The next slide is our specialist teams in ESG. So we've broken it down into two different teams. One is the governance team headed by Donna Anderson. And then the other one is the responsible investing team headed by Maria Elena Drew. We have 12 people on the responsible investment team, 3 people on the governance team, and then 2 people who are purely dedicated to regulatory research. And this is important, and I think it's growing more and more in importance in the US specifically, because regulations, whether good or bad, is determining a lot on how plan sponsors are integrating ESG within their defined benefit and defined contribution plan. So I think having a pulse on what the regulation is doing and where they're going is really important to us as we think about ESG integration. And I'll talk a little, as we go through the deck, I'll talk a little bit about how this team, the responsible investing team and the governance team, works with our portfolio managers and analysts to actually build ESG into our fundamental research process. So if we turn to slide 7, Eric, please. I wanted to talk about our investment philosophy and spend some time here. So at T. Rowe Price, we have 3 core tenets of our ESG integration philosophy. First is integrated. We think it has to be collaborative. And the third and very important is it has to be material. And what do I mean by that? So when I say integrated, it means that we push down the onus of integrating ESG into the portfolios at the analyst and the portfolio manager level. So we don't have a sidelined ESG analyst for every team who's checking the box and saying, yeah, we are ESG integrated. We actually push it down to the person who's making the buying and selling decisions at the investment level. And this is important because then he or she understands what's important to their fundamental process, to their philosophy, and then sort of marries that accordingly into the investment research process. The second core tenet is being collaborative. And this is where our ESG specialist teams come into play. So what we do is the ESG specialist teams will act as subject matter experts. They will try and help our portfolio managers and analysts understand what's important from an ESG standpoint. They will develop toolkits that can make our analysts and portfolio managers' job easier to integrate ESG. And one of the things that this team has done is we've built an in-house proprietary model called the Responsible Investing Indicator Model, or the RIM in short. And RIM is a model that covers 15,000 securities across equities and corporate bonds. And we've got different versions of it for different asset classes. And we'll sort of have a slide that talks about that a little bit. But basically, this team will develop the tools and then work with our portfolio managers and analysts to sort of help them understand what's important. And then the portfolio managers will then incorporate that into the investment process. And this is where the third factor becomes very important, is the materiality of it. Right? As an analyst or a portfolio manager, we understand that, what's important and what's material to the investment thesis of a company. So let's say we're looking at a bank, for example, from an ESG standpoint. Now, if I'm a bank analyst, carbon emissions for a bank really doesn't do it, right? It's not material for a bank. What's important to banks is how are the employees treated? The retention system of the talent, the human capital. I think that's very important. The S side of ESG, that's material. And from an E standpoint, the environment standpoint, it's not the bank's own carbon emissions, but what we want to look at is who are they lending to? What institutions are they lending to? And how will that impact their future revenues and profits from an environment standpoint? So that's why materiality is a very, very important part of ESG. And that's why we built our own model that sort of takes that into consideration instead of relying on third-party providers like MSCI or Sustainalytics, because then they have their own materiality factors and how they weigh them, and we didn't want to rely on third-party factors. So if we move ahead, the way we think about ESG is a mosaic of information. So we want ESG to be understood and evaluated in the same way that you would in any other factors from an investment thesis standpoint. So as a portfolio manager or as an analyst, when you look at the macro environment, you look at the industry dynamics, financial analysis, geopolitical environment, you want to look at these non-financial factors or the ESG in the same way. Now, granted, these non-financial factors are hard to quantify and put a number to it, but that's why the RIM model helps our portfolio managers sort of do that and quantify it in a way so they can start thinking actively about it. And so it forms a mosaic of information when now you can get a holistic view of the company. And from, let's say, for an environmental standpoint, if it's a mining company, if it's doing the wrong thing, we know that in 3 to 5 years down the line, that environmental factor will be hurting the share price because eventually there might be a big mine accident if there's no safety protocols in place. That might impact the share price. So how do we price that right now from a discounted cash flow standpoint? So that's why it's important to take a look at it holistically. The next couple of slides sort of go into our RIM model. And this is what I was talking about. This is how it goes into different asset classes. So we have the RIM model for equities and corporate bonds. This was the first framework that was created that covers 15,000 securities. But then now we've sort of gone on and progressed further and made it applicable for sovereign bonds, for muni bonds, for securitized bonds. And so that way we're covering every asset class that's possible. And across T. Rowe Price, I should say every strategy we have, or I should say most of the strategies we have are ESG integrated across equity and fixed income. The exceptions would be our quantitative strategies or, strategies like very low duration in fixed income, where the aspect of ESG doesn't really play as much importance. But overall, we would say every security, every strategy is ESG integrated. So if we move to the next slides, this is the RIM model. This is an output of how the RIM model would look if you as an analyst would go into our research process, a research sort of system and look into it. We've broken it down, and I'm sorry, you'll see a lot of different numbers here and a lot of different colors. But 2 important points here. One is we wanted to make sure we break it down at the sub-industry level. So we look at more than 150 different sub-industries and break it down to understand what's material for each of the subsectors and how do we weigh those factors from a materiality standpoint. The other critical point here is, as you can tell, we have not boiled it down to one single quantitative number. So it's not to say when this analysis is run across securities, our portfolio managers can say, this is a bad security or this is a good security. It sort of gives them an indication on the outliers, but what we want to do is we want to be additive to the entire investment process. So this will give them a toolkit to understand, okay, if it's a red, why is it a red? And what can we do to make sure that transition from red to orange to green can happen? That's where the value add comes in from an ESG standpoint, is how do you sort of, work with companies to do that? And that sort of brings me to my secondary point of ESG is, if you think of ESG and the way we think about it is, it's two sides of the coin. The first half is the data aspect. That's where our responsible investment team, building the RIM model comes into consideration. That's a data aspect. You look at the data, but you don't just make decisions based on data. The second and very important factor is the engagement piece of it. So Eric, if you don't mind moving forward a couple of slides, please. So this is where we think, as active managers, as a research powerhouse with $1.5 trillion behind us, we can really have discussions with management teams. So our portfolio managers get access to the CEO, the board of directors, and we can drive some changes. Eric, one more slide, please. And so this is where we actively engage with our portfolio teams, and we can help drive changes where it's not an activist role. It's not where we're going in and taking board seats and competing with management. We're working with management teams here as an engagement policy to say, what can the company do better from a business model standpoint, from an ESG standpoint, that can help it sort of be better and better from an ES&G standpoint. And you see more and more of this, specifically in the non-developed world, the emerging market countries, where a lot of these companies wouldn't even know what to disclose, right? So disclosure is a big topic of engagement. And I think if we can help management understand why it's important to disclose some of these ES&G factors from the business model standpoint, it helps them understand, it's important for the investor, it's important for the community, and it's overall beneficial to everyone from a capitalism standpoint as well. So I'll leave it at that. I know I've gone through this quickly. We had about 15 minutes, but happy to take any questions right now or at the end after Jason goes through the international equity portfolio. But I wanted to thank you again for your time. And Eric, I'll turn it over to you.
Thank you, Taham. Jeff, I see you have your hand raised. Did you have a question?
So thank you. I don't know if this is the right time, but it's maybe a little bit of a preview of coming attractions for our discussion later today about the planning session. But Doris and I had talked about having at some time in the future, if not next month, a discussion about fiduciary duty. And I just wanted to very briefly mention that with regard to ESG investing, it does trigger several duties. The duty to diversify investments, the duty of loyalty. Your primary duty is to members and beneficiaries, and the duty of due care, where you do rely on experts, but requires active participation and asking questions. And so just very briefly with regard to ESG investing, I think it's important going forward as you're looking at this, and you'll work with Callan going forward to be able to try to quantify the impact on return and risk, because that is one of the essential duties to maximize return and minimize risk. So just kind of planting that seed as you're going forward on this discussion.
Thank you, Jeff.
Great. Thanks for that, Jeff. And that is always something that we're thinking about. Is there any other questions, or should we move on to the broader portfolio with Jason? Okay, I'm gonna share that presentation. 1 second. Here we go. And I will hand it over to Jason to talk about the team.
Great, thanks, Eric. What I thought I would do is just give a brief refresher on the team philosophy and process, and then talk about performance looking over the last year, and spend some time on positioning and outlook into the rest of this year. So our team page is on page 14. A couple of things here. One, you'll notice that we have a multi-PM structure, and that is by design. We want to have investors located in the markets in which they invest. So we have Ben in Europe, we have Hiroshi in Japan, and then we have Wen Li in Hong Kong. And Wen Li has responsibility for Greater China. Hiroshi has responsibility for Japan, and the rest of the world is Ben's responsibility. Joining the three of the PMs are dedicated analysts. They are dedicated to covering small cap investments, international small cap investments. They're located in the offices alongside the PMs. They are generalist by nature. So they cover stocks on a regional basis. So it's not uncommon for them to look at a financial in the morning and talk to an industrial in the afternoon. That's by design. This team structure has been in place since day one, effectively. So we launched the strategy in 1988. It's worked well, largely because of the asset class. This is an asset class that's growing over time. It's not well covered. It's not well understood. So having cultural expertise, language expertise, being located in the markets in which you invest is very important for international small cap. If you turn to the next page, this is another advantage that we have, which is the fact that we have a very broad research platform that we get to leverage. So page 15 shows our global equity research team. These are the analysts on this page have deep industry expertise, and we leverage their insights. Whether it's a very global sector like technology, we can't invest in Apple, but what Apple does has implications for some of the semiconductor stocks that we own, and that's very important. Or what Tesla's doing with electric vehicles is very important to some of the battery component makers that we own in this portfolio. So the advantage of this structure is you have a team that's dedicated to small cap investing, but leverages the broader resources of T. Rowe Price research. So you get the best of both worlds. If you move ahead to page 17, I'll talk a little bit about the philosophy and process. What we're trying to do in this portfolio are find companies that can be much bigger on a 3 to 5 year view. Our goal is to find those companies early, identify them, own them, and hold them for long periods of time, and let those returns compound to our shareholders. There are stocks in this portfolio that we've held for 20 years or more. They were very, very small when we bought them, and now they are multi-billion-dollar companies. In some cases, multi-billion-dollar companies, like the case of Shopify, which we bought when it was a $2 billion company, and now it's north of $150 billion. Those opportunities are rare, but when we find them, we want to buy them early, hold them for long periods of time. The types of businesses that we look for tend to be higher quality, which we would define as high return on equity or high return on invested capital businesses. They tend to be asset-light businesses and highly cash generative. On top of that, they tend to have what we look for is a durable growth profile. So this is a growth portfolio. That's our style. We like to buy growth stocks. And durable growth, what that means to us is we want to find companies that can grow above average beyond a business cycle. And that's really the key part, beyond a business cycle, right? So they can do it hopefully year in and year out, and with accelerating results. And we've been able to do that. Because of that quality bias and because of that growth bias, just bringing it back to ESG, the portfolio looks very good when we screen on ESG factors. Over 86% of the portfolio would be green rated in our RIM model. That's the highest color, if you want to think of it that way. We don't own any stocks that are red rated, and we own a handful of stocks that are orange rated. And most of those, as Tom was saying, the issues are around disclosure, right? These are small companies. They don't have large investor relation groups or anything like that. So a lot of the engagement that we spend with them is about improving disclosures and improving processes. To give you a sense, in last calendar year, we did nearly 60 meetings focused with companies working on ESG issues on stocks that are held in this portfolio. So this is
very much a part of the process in terms of ESG integration. It's not an impact portfolio, but we are trying to make our trying to help our companies understand the issues and get better. Just back to the durable growth. What we're looking for are companies that operate in industries that are growing, and ideally they're growing their slice of the pie. They're run by management teams that are good capital allocators, that are strategic in what they do and have a good vision for what they do. And then also talk about valuation, right? What do we want to pay for this business? Now, for truly exceptional assets, we will pay a premium for premium growth. So this is not a growth at a reasonable price approach. You know, we will pay up where we think the growth warrants. So I'll pause there real quick and see if there are any questions in terms of the philosophy, team, or process so far. Okay. Let's turn to page 32 and talk about performance. So I appreciate the remarks by Callan. You know, this is an asset class that you want to have exposure to. It's not widely owned by investors. It's not well understood by investors, and the universe continues to grow. So if you look at U.S. small cap or U.S. equity markets, the number of stocks has shrunk dramatically by 30 to 40% over the last decade. Our universe has grown by over 50%. So there are over 8,000 stocks now in international small cap, with fewer people, fewer eyeballs looking at this asset class. So what that means is there's very high dispersions of returns. And that is the inefficiency we're looking to exploit. And if you look at the long-term track record of this strategy, we've been able to do that fairly consistently. If you look at the last 12 months, it's been a much more difficult environment for us. And I'll highlight 3 reasons for that. One is we had a very strong 2020. We outperformed the benchmark by well over 20 percentage points, which is not our best year, but one of our best years. That was largely because we were allocated to companies that were innovative, that were COVID beneficiaries in terms of they were on a long-term trajectory to gain share, and that trajectory got accelerated. So that was 2020. A lot of those stocks actually underperformed in 2021. So some of that is, some of these stocks were up 200-300%, and they gave some of that performance back because that on a year-over-year basis was not sustainable. For many of those stocks, we still feel very comfortable that the long-term trajectory is upward, and we've defended many of those stocks. I mentioned earlier, we like quality, durable growth companies. That leads us to certain sectors where there are abundance of opportunity, typically technology, healthcare, consumer discretionary, to a lesser extent, communication services. We tend to be underweight financials, materials, energy, and utilities. And that, again, that's just a natural outcome of the type of the types of stocks that we look for. The issue with 2021 is a lot of the areas of the market that we don't own, that doesn't fit with our process, did very well. So energy, for example, metal and mining companies, to a lesser extent, utilities. So our performance was held back because we didn't have an allocation, or we didn't have enough exposure to those areas. And that is a risk that we know as the investment team. But that did unfortunately drag down results last year. And then finally, we made some mistakes. There were companies that didn't meet our expectations. A stock like StoneCo, for example. This is a merchant acquiring business in Brazil. So
an analog would sort of be would be like a MasterCard or a Visa, local version of that. And they've had some credit issues. So that's one that we've stuck with, for example, but it has provided us with a lot of headaches on the way. Other areas of opportunity, I would say, in looking back over the last year in terms of what helped us, certainly stocks that are more innovative within healthcare, for example, within industrials, that again, in some cases, play on some ESG themes in terms of energy efficiency or better process technology, and then also financials. We're under allocated to banks and insurers, and we tend to have more of an allocation in capital market plays, private banks, private equity sponsors, and those stocks did very well for us. We also have a large allocation to China, about 12% of the portfolio today. We think this is one of the most attractive areas of the market, particularly within international small cap. The firm is committed to putting a lot of resources there, and we've done that. But China has been a volatile place. We're not giving up on China. Again, there's a lot of very interesting ideas in healthcare, in the industrial and consumer spaces that we see, being a much larger opportunity on a forward-going basis. In terms of where we go from here, it's tricky. We're in a tricky spot right now. Notwithstanding the issues with the pandemic and Omicron, but our view is that the world is on a path towards normalization and improvement. Part of what we've seen is central banks have maintained low interest rates. That's created a wall of liquidity that's gone into risk assets. This asset class has been a beneficiary of that. Growth stocks have been a beneficiary of that. High multiple stocks have been a beneficiary of that. So the key question going forward is, as central banks withdraw that liquidity, raise rates, what does that mean? And particularly in broad equity markets that, in some cases are trading at all-time highs. So our view is we need to be more selective. In the case of some of the higher multiple stocks, we have been trimming those over the past couple of quarters. We have been focusing on quality, on the durability of growth. And we think that will be one solution going forward for us. We haven't dramatically changed our sector allocations. Again, we tend to be overweight technology, consumer discretionary, and healthcare. On the margin, we have lightened up within technology, but it's still a sector that's overweight for us. And then we're also fairly overweight Europe. That was partly by design, partly by an index change about a quarter ago. We're massive, and as a consequence, we're fairly underweight Asia ex-Japan. So we have been adding to Asia ex-Japan, and we have been trimming some higher valuation stocks within Europe to kind of bring that more into balance. But looking forward into 2022, the key questions are, how does the world normalize? What does that mean for interest rates? What does that mean for inflation? Our view on inflation is that it's more transitory than structurally higher. But some inflation is good for the portfolio, so we're not too worried about that. But we're really focused on that maintaining that quality bias, maintaining that durable growth bias, and being much more selective in terms of new positionings that we're taking on, understanding that downside risk matters a lot. So I'll pause there and see if there are any questions.
Jason?
Yes.
Jerry Harris. You said, but it was obvious that you were very heavy into Europe and light on Asia, with the exception of China. Mm-hmm. And when I think of ESG, I was at CalSTRS shortly after we adopted all of our ESG standards. Mm-hmm. And when you look at the future and things like pollution and in China, each person gets a hunk of coal every day to go and put it in their little stove, and you can barely see 3 buildings away downtown Beijing. I'd sort of like to know what your thinking is as far as China in the future, and whether much of what they're doing is actually lip service when you, oh, there's my cat on my lap. When you look at 1.5 billion people who live a life that really does not look to the future, it looks to that hunk of coal. So tell me what you think.
Yeah, I mean, China's an interesting case, certainly. At the end of the day, I think our view is the Communist Party wants to remain in power. In order to remain in power, they have to provide jobs and economic growth, and that can be at odds with sustainability, with environmental factors. But at some point, it becomes unsustainable. So we certainly understand the comments there. In terms of what we find, where we see opportunities within China, tends to be more on the innovative parts of the market. It tends not to be in kind of quote unquote old economy stocks. We're not owning steel mills and things like that. It tends to be healthcare, for example, to a lesser extent, real estate. So, we aren't invested in some of those areas that you mentioned. It doesn't mean that the problems don't exist within China. We have seen improvement over time in terms of disclosures, in terms of more thinking around environmental issues, around energy adoption and things along those lines. But it's not something that's going to be solved overnight, certainly. So the short answer is it's going to be tricky. But we're not particularly exposed to sort of the old economy industries that would be heavily polluted or polluting, I should say. Not to say that, again, that's not a larger issue for the globe or specifically for China.
Thank you.
Are there any other questions from trustees? I don't see any. If not, I would like to thank, we would all like to thank Eric and Jason and Tom for bringing that information to us. Really appreciate the ESG info.
So
I know, Jerry, you had asked for that too at one time, so I'm glad. Yes, Trustee Jurdy, see your hand up.
Yeah, thanks. So I just have a follow-up question. So it seems like there's 2 ways to use the ESG information. One is to advise with active management and selection of companies, which I think is what you primarily focused on because we have active management with Small Cap International. But it also seems like it could apply towards index funds where large investors or maybe even small investors in index funds could say that they want better governance and management of the companies through their representatives on the board of directors of these companies. So to what extent does T. Rowe Price, we heard you talk about having direct meetings with these companies to try to get them to improve their disclosure, but what can we get out of ESGs through our representatives, our proxies on these board of directors through our index funds? And I'm thinking large cap US domestic.
So Jason, you can chime in here if you want. I can get started on that. So thank you for the question. I think with the indices, it's a good starting point in the ESG space. But some of the challenges that you face in an index is, you've got thousands of companies in an index portfolio. Now, does that company who's running that passive index portfolio have the resources to actually engage with each one of those companies within there? And a lot of times what happens is, a passive index portfolio will have certain, screens, or they may use a certain data provider. And it's not to say that one data provider is right or one's wrong, but ESG is a fluid, data. It's not like it's black or white. It's fluid, and you can sometimes change a lot of those things via engagement, or sometimes if a company is transitioning, you've got to look forward and say, what is the company going to do 3 years down the line, rather than seeing what the company has done in the past. A lot of the external data providers are backward looking. So they'll look at a company and say, all right, X, Y, and Z is in an insurance company. Now, even though the company might be doing the exact right thing from an ESG standpoint, but they may be penalized because they are in a sector which is a custodian of health records. And typically with some of these data breaches, all the companies within that subsector are penalized if you look at an external data provider, right? And a lot of the times the data providers don't agree by themselves. If you look at a study that was done, I think from University of Berkeley a few years ago, and they looked at 6 data providers, and they looked at the correlation between those data providers, and it was 0.4, which means more than half of the time, the data providers don't agree on what's material and what's significant for a company. So a company like Tesla, for example, could be above median by MSCI, but below median by Sustainalytics. Now, depending on what data source you use, you could have a Tesla being a good company or a bad company. And that is why I think you need to peel the onion a little bit more and look at it from a holistic standpoint. Does that answer your question?
Sort of. I think my focus was, is there a way that you could simply invest in index funds, but make sure that your proxies on the board of directors are taking environmental sustainability issues into account as your representative on their board of directors?
And if I might piggyback on that, it's a pretty simple thing, I would believe, to take a look at that board of directors. And are there any women on it? Or are they all totally male? Governance is a big part of this as well.
Yeah. So to answer your question first, Trustee Dan, I think that depends on which provider you're going with and what their policies are. In terms of diversity, as T. Rowe Price, I can talk about T. Rowe Price. I don't know what other index providers or peers do, but at T. Rowe Price, we push a lot on diversity at board. And it's diversity from, how many female board members they have, how many underrepresented minorities they have on the board. And from an intellectual standpoint, how is it a diverse board? That's what we think about. How is it bringing in diversity at the board level? So it's definitely a big topic, and it's part of our RIM model as we evaluate securities.
Robert, I see you have your hand up.
Thank you, board. Trustee Jurdy, yeah, in terms of the passive indexes, that's sort of a topic that we're going to talk about in the future. Specifically, Trustee Schattmeyer mentioned the Calvert Index. So that would be one in particular. The thing that you have to kind of remember about the passive index funds is that they are passive, that those indexes are created and maintained by an organization, and that they do reviews maybe biannually or annually in some cases, and that the companies that are in the passive fund are there through oftentimes through a complex methodology. Certain passive index providers would be Calvert, for instance, and even the Russell indexes have specific ESG indexes. So that is kind of a deeper conversation that we will get into over the next couple weeks here. We're also going to look at Sustainalytics.
Any response or comments?
What is Sustainalytics?
Sustainalytics is a Morningstar company that helps provide ESG risk ratings for different companies.
Okay, thank you.
Yes, Trustee Anderson.
Thank you. And I appreciated T. Rowe Price's kind of explanation of their integrated approach, and also going back to something that our counsel Jeff Burke said earlier. I think when we talk about ESG, a lot of times I think back to kind of like apartheid and so forth, where investing was used essentially almost as a driver for influencing political, environmental, gender issues, all of those issues. And it seems to me, just from what I've been hearing, is that ESG, given that there's starting to be a consensus or a agreement culturally that we need to care for the environment, we need to address equity issues and so forth, is it just becomes one of those elements of a business that would lead to success in the future, that would lead to greater valuations in the future. And so you don't wind up essentially trading a fiduciary responsibility for a social responsibility. You're just making a good business decision that those will be highly valued companies in the future. Is that a reasonable interpretation of your philosophy?
Thank you. Yes, I would say it is, you sort of nailed it. It is, as ESG integration, fiduciary duty is the primary motivator. So we think of ESG integration as something that can help us mitigate risk and enhance performance, right? So we think of it as a holistic view. And I'll give you an example. So even, 10 years ago, or even 15, 20 years ago, let's say, if you were a portfolio manager and analyst, your skill set was to go and dig into fundamental research, to look through the numbers quantitatively, look through balance sheets and income statements, create a DCF cash flow. You do it for all other different companies within that sector, and your edge was that information you gleaned from those numbers. Now that still exists, but over time with technology, that has sort of subsided quite a bit, right? So just looking at information from financial numbers doesn't give you that edge, because everyone's looking at it. And in fact, with technology, with Bloomberg and FactSet, you can get that literally in an instant as soon as something's released. So ESG is some of those non-financial factors that are not reflected. Think of it as an intangible. That is a portfolio manager, if you review that and holistically incorporate it as part of your investment thesis, you can actually make better informed decisions, whether that company share price will do well in the future or won't do well. And depending on that, you make your position sizing. So yes, it is, fiduciary duty is the primary motive here, and it's basically to enhance risk-adjusted returns over time. That's the way we think about ESG integration.
Good, okay.
Trustee Cromer.
Chair Smith, I'm sorry to interrupt the very in-depth conversation going on, but I do have a work situation that's pulling me away from this meeting right now that is urgent. So I'm going to have to turn off my video and leave. I just wanted it to be noted by Judy, and I apologize to the other trustees and the presenters. I will turn on my video when I return.
Be safe, Quincy.
Thank you.
Yeah, thank you. Jim, did you have a response to that? I'm looking for your,
No,
I lost you on my screen.
I appreciate the response, and I think it's more, at least more in sync with my perception of the value of ESG and the purpose of ESG. Really, it's and it doesn't cause us to run afoul of being fiduciaries.
Yes, thank you. Any other trustee comments or questions?
Kathy, it's not a,
Yes.
well, to piggyback on what Jim just said. If there's any difficulty in discerning just how ESG can put trustees in a difficult position, what was beginning my second term on the CalSTRS board, we had been going round and round about the fact that our portfolio excluded cigarettes, tobacco. And we asked our staff to come up with a fiduciary response so that we could make a fiduciary, there's a term like this, a fiduciarily, though the word doesn't exist, correct response to the fact that in 1 year, it cost the teachers of the state of California $1 billion because we were not invested in tobacco. And it wasn't until we were finally able to come up, our investment staff, with a dollars and cents reason why it was wise not to be in tobacco. It actually almost cost me my second term, because when I was up for Senate confirmation, Alex Padilla, who is now one of our senators, was on Senate rules. And out of the blue, he pulled my confirmation, and rules sat on it until the end of that legislative session. And I would have been off because I was tired of not having the guts to vote one way or the other about tobacco. And fortunately, the head of Senate rules put my name back in just right before they adjourned, or I would not have been able to serve. So it's a real sticky thing to be in ESG and not have it overlap. Pardon me, I've got a bit of a sore throat, but not have it intellectually compete with your fiduciary duty. Because what we do for our members is we maximize what we can get through our investments. It was a really tough vote, and for me, it was a shocking and very difficult time. But it's one of the reasons I've pushed to have ESG become at least something we're aware of on MSERA.
Mm-hmm.
And certainly within the last couple of years, not only with COVID, but also with what's coming out of our federal government, is we're trying to address the damage to our planet. It's something that should be a part of every vote we take and every investment direction we take as well. So I'm really glad we're taking a look at this. You know, I appreciate Doris and Robert gleaning information for us and getting T. Rowe Price to come and talk about more of an internalization of ESG than it used to be when I was on CalSTRS. But it was really tough to go in and what was supposed to be a very simple confirmation hearing, and all of a sudden, you know, you're being pulled because of the fact that we didn't have tobacco in the CalSTRS portfolio. And you know, teachers, we don't like tobacco, so it was a tough vote. We also don't want to lose $1 billion a year. So you know, that's the kind of thing that can come into fiduciary duty. So anyway, thanks guys for bringing this up and giving us a chance to look at it and talk about it.
That puts you in a tough situation, and being a recipient of a CalSTRS pension,
Yep.
I understand the conflict there. Yes,
Yep.
absolutely.
Absolutely.
So again, Eric and Taham and Jason, thank you very much for your input today. I think we can all say that we learned a lot, and we appreciate you being here.
Thank you, Chairwoman Smith, and the rest of the committee. Thank you so much for including us in your agenda. We're always happy to have discussions like these with you guys in future meetings. So please think of us anytime you have questions. we're always here. So thank you very much.
Thank you.
Thank you, everyone.
Thank you.
Bye-bye.
So I think we need to backtrack, I guess, to the monthly investment performance report, Greg. Is that on the agenda before T. Rowe Price or no?
Yeah, I'd be glad to speak to it quickly. I didn't prepare a lot of remarks, but to me, kind of the few themes we're going to right now is a transition from monetary and fiscal stimulus to less monetary and fiscal stimulus and monetary tightening going forward. And we haven't seen this in quite a while. And we're going to be moving into quantitative tightening, which is when
Their interest rates.
reserve reduces the amount of money in the economic system. And there's a multiplier effect associated with that. So, we fully anticipate increased volatility going forward. And the way the world looks today looks different from what it looked like at the end of the year. End of 12/31, we saw a big run up in the US stock market. We had a really good quarter, total trust up about 3%, outperforming the benchmark by about 10 basis points or so. That's without the real estate mark coming in. So we should anticipate those returns to be a little bit better when we get the final numbers in. So pretty good quarter, but we also saw some pretty good divergences between our value and growth managers. And on a month-to-date basis, that divergence has gotten even bigger, where most value managers are significantly outperforming the growth managers on a month-to-date basis right now. You'll see that NASDAQ is close to bear market territory right now. If you look at the stocks within NASDAQ, I'm going to butcher this statistic, but it's something like 40% of the stocks are down 50%.
Wow.
And so, you've got the Apples of the world, $3 trillion market cap holding up the market. And then you have a lot of individual companies underneath, growth-oriented companies in particular, that have come down meaningfully in value. So we're going to see a huge dispersion in the month of March and throughout the first quarter, most likely, from winners and losers in this. But as always, we focus on the long-term numbers. We focus on the 3, 5, 7, 10-year numbers. That's our time horizon, and those numbers remain really robust. Total assets stood north of $700 million at the end of the year, $708 million at the end of the year.
That's pretty amazing, even
It
for my
is.
short time on
Yep.
the board.
Yep.
Yes, it's grown tremendously.
Yeah.
So are we ready to leave investment matters agenda topic? Anybody else? Thank you, Greg and Claire and Hannah, for joining us today. We appreciate it.
So good to see you.
Good to see you
Hi,
too.
Greg.
So let's move on to item number 7, strategic planning introduction, and I'll turn it over to Director Rentschler.
Thank you, Chair Smith, members of the board. Today we have with us Amy McDuffie and Catherine Jackson with Mosaic Governance Advisors. And this is the company that the ad hoc committee recommended and the board chose to engage for consulting services for our upcoming strategic plan. Today, they're going to introduce their process and provide some additional information on their what to expect between now and the meeting. So I'll turn it over to Amy and Catherine.
Thank you, Director Rentschler. Madam Chair and members of the board, it is a true pleasure to be here this morning to kick off this process. We really appreciate that you selected us and trusted us to help you build out your strategic plan for the next several years. And this morning, what we were aiming to do is just tell you a bit about what's in store as this process unfolds in the next 3 to 4 months, and get some input and feedback along the way. We know that many of you have participated in strategic planning before, and so we'd like to make sure that we're familiar with your expectations so we can align accordingly. I think my colleague Catherine is on, but let me just do a quick sound check for her. Catherine, are you?
I'm
Yes.
here. Thanks, Amy.
Terrific. Thanks, Catherine. We did have a brief presentation that we would like to share. Did you want me to share my screen to make that work?
You're welcome to share.
Okay, thank you. I'll do that now. Terrific. Hopefully everyone can see that. Great. Okay, so again, we'll do a brief kickoff this morning, and we provided this information to you in your materials, so I will skip the gory detail behind who we are. But certainly, if you have any questions, you can let us know and ask those, and we'll do our best to respond. I'll do most of the talking for our slides this morning, and Catherine, please jump in if I've missed anything significant. But as you can see here, Catherine and I have been working with public pensions here in the US as well as internationally for decades. We work together on strategic planning. I always say it takes a village to make a strategic plan because it's not something that is best done in isolation. It's best done when you can collaborate and talk and have a lot of brainstorming and risk-related conversations around how your future is going to look and how you want to steer yourself to be successful in that. And so that's what we're aiming to do. We work with public pensions of all sizes and have, again, several decades of being in this industry. It's a fascinating one. We know that no two pensions are alike. And that's the thing that we always focus on in our process is helping uncover what it is that your circumstances and future will hold for you and how you'd like to position yourself accordingly. So what we have in store is to just do a bit of brief context. We'll get into what the process looks like. And hopefully some of this will be familiar to those of you who have participated in the planning process. You may have used slightly different words here or there, but this should ring true, we hope. And if it doesn't, please don't hesitate to ask. And then we want to do a preview of, again, what you'll be seeing from us as the weeks and next couple of months unfold. The good news is that, certainly looking at your situation, you do have a solid foundation for your strategic planning process. And we know that you've had one in the past. You have a mission statement. You have a vision statement by way of your objectives that are characterized. And you have guiding principles, which other organizations may refer to as core values. So these are all good starting points because it tells us that you've had consensus around these statements in the past. And so you have a good sense for what's important to you. Whether those things remain the most important priority is what we aim to uncover through the process. We know that you also use an annual board work plan, and it too includes some of the elements that we would commonly find in a strategic plan. So again, very solid footing. The key question that we like to help our clients focus in on is what you see here highlighted in the teal box at the bottom. And that's really to help you focus on what new things need to be brought into life to move your organization forward. Your strategic plan should help you be effective and efficient and productive, but it should also be a filter for what shouldn't be done. And so that's the other important piece that sometimes can get overlooked that we want to make sure we maintain a focus on with you and help you to do that. So in terms of expectations, what can you as a board expect from us relative to the experience? Well, certainly as we get going in February, and hopefully we can have a meeting in person with you to facilitate your discussions, but we want to focus on that key question. And we'll do a bit of a preview of what that February session will look like in a bit. But again, what new things need to be brought into life? What does a successful future look like for MSERA? Along the way, we'll refresh the terminology that you're using. So we're all using the same terms when we go through the planning process. We'll want to take your existing strategic plan elements. And after we have some discussions around them, we'll want to ask you to evaluate, are these still stated in a way that resonate with you and that convey the right messages going forward. So that's a big part of what we'll be doing with you. Ultimately, we want to get a multi-year strategic plan for you that's specific and measurable. And whether that's 3 years, whether that's 5 years, we'll have a conversation with you about what is the right time period, what should be in focus for this next cycle. And once the strategic plan is developed, it's not a document that sits on the shelf, as we know you're well aware. It too needs to be wired up or connected, if you will, with other governance practices that you routinely take. The evaluation of your executive director, for example, your operating budget, your own board self-evaluation. Those are just some pieces of connecting points that you want to ensure that your strategic plan dovetails into. So at a very high level, those are the expectations that we're hoping to meet for you through this process. I did want to stop and ask if the board has any expectations. Again, we know some of you have participated in strategic planning. Are there certain things that you're hoping to get from this process? Madam Chair, I'll turn it over to you for that quick question.
I can ask if anybody has any comments. I can't see the whole crew at the same time, so I'm flipping through. Welcome back to Quincy. As we just heard, there's many of us that have gone through this process before, and but not with Amy and Catherine. So anybody have any comments that they want to
Madam Chair,
express?
Julie
Oh, I see Julie.
Hi.
Julie.
My question is, through this strategic process, do we reach out to our members and active and retiree members to find out what their interests are too, and maybe what they see as our failings and where we can improve our current strategic plan and going forward? So I don't know how they're brought into this process, but I feel like that we shouldn't miss that part of it.
If I could jump in here for a moment, that is a very good point, that you often reach out and get feedback and involvement from all of your different stakeholder groups. Due to the timing and some of the issues we're facing with completion of the project and wanting to get us at the request of the board, the strategic plan done, I did not build in time to do meetings with membership or specifically plan sponsors. It's more board and staff moving this one forward, but that is a goal that we would incorporate those steps in the future. And we can look at taking a step back and trying to incorporate those, but it would affect the time horizon to try to incorporate that at this point. Based on our past discussions, there was a desire to bring this forward, I thought, kind of more immediately, because we didn't do a review of the process last year.
Thank you, Doris.
Okay, I think I don't see any other comments at this point.
Okay, thank you, Madam Chair. Thank you, Madam Chair. And Director Rentschler, I think, I just wanted to mention, and, this is often the question of when do you reach out and get that kind of data? And sometimes we see organizations doing that before they undertake strategic planning. And sometimes, actually, as a result of the development of performance measures, we see organizations do that as part of the strategic plan. And that's because there's a trend that we've seen other pensions undertake to better align their communication methods, and that's the delivery, the frequency, the content, with their member and beneficiary preferences. And so one of those first steps, as you can imagine, if you have an objective like that, is to reach out and get some research and some data from the membership about how can we serve you better? How do you prefer to receive information from us? And so, although we may not be doing that at this point, it seems plausible, if that's the will of the board through this process, that Director Rentschler and her staff could do that at some point as part of your strategic planning initiatives that come from this process. So hopefully that kind of helps. Let's do this. If there are no other questions, why don't we move forward so we can be efficient with your time? And just talking a bit about how we see the process. And my sense is that as Catherine and I talked about your prior strategic planning efforts, you probably share a similar view. Strategic planning is not what we would refer to as a one and done kind of exercise. It's something that lives, so that every 3 to 5 years, you're coming up with crystallizing what is it that we do, what is our purpose, and where are we going now? Where are we going next? How are we refreshing that set of decisions with everything that's transpired? And we all know, just look, we're all here virtually. Lots has transpired, not only in your own operating environment, your professional day-to-day lives outside of this service to your board and Sarah, but everywhere in the world. And so there's a lot to refresh on. And that's why it's beneficial to have this kind of look at what are the strengths, the weaknesses, the opportunities and threats of the organization, what's happening in the world around us, how do we want to navigate through that, and what are our priorities, not only at a high level, but the actions that are going to be needed to resolve that. And then how did we do? That's what this process is at its very core. It's tremendously helpful. We think that the organizations that do strategic planning have a definite strategic advantage over other pensions and other firms in the financial services industry. So that's why it's so important. And again, in February, when we meet with you, we'll be talking with you about what's the appropriate time period. Is it a 3-year strategic plan? Is it a 5-year strategic plan? We've seen and done both. There are various reasons, pros and cons, for doing it that way. It really depends on what you have going on as an organization that plays into that. So that's one of the discussions we'll ask you to start thinking about. I mentioned at the outset, actually, I should say, that this is a 3 to 4 month process. And so we wanted to provide you a schematic of how this will likely unfold. And this can be fluid. We may have some things shifting around, with the exception of your meeting dates. So we've earmarked February 9th and 10th. You see that the second box from the left, if you will, to meet with you and to do a strategy session. And we think that there's going to be tremendous value in that. We think you're going to enjoy the discussions. We always enjoy hearing what our clients say. We enjoy bringing the trends that we see elsewhere in the industry just for your consideration and discussion. So that's mostly about what we're going to do February 9th and 10th, although we'll run through a quick agenda on that later. And then we'll go away. Catherine and I will work together to come up with your strategic plan. And we'll present a first reading to you, if we can, at your March meeting, just to take advantage of the momentum. After you've met in February, we want to make sure that you see some of these concepts presented back in front of you for your discussion. You may have some tweaks or major changes that you'd like for us to make. We try to get it as right as possible the first time. That's what we'll commit to you to doing. We pride ourselves on our listening, even though I'm doing a lot of talking this morning. And then in April, of course, that's when we would ask for you to consider taking action. And again, this timeline could be fluid. That may be May, but what we want to position you to do is to be able to take on board these initiatives as part of your budgeting process and your planning process. So that's the approach that we have. We like to ask staff and board to collaborate because we think, again, it takes a village to bring this all together. You all come at this with different ideas, backgrounds, sets of experience, and all of that proves very valuable when we can pull forward the essence of that consensus. So that's the timeline and activities. Just previewing the February offsite discussion, you can see that we would have a full plate for you. Again, I mentioned deciding on the strategic planning cycle time, but then doing things like engaging in a visioning exercise, completing the SWOT analysis, but more importantly, interpreting and prioritizing what we're seeing from the SWOT analysis. That's very instructive as we think about penning the initiatives that you're going to be working on in the next 3 to 5 years. We'll come up with vision for success statements. those will look very similar to what your objectives, what you call objectives today. They also serve as a basis for performance measurement. We'll ask you to evaluate your current mission, the objectives or vision as we see those, and then your guiding principles. And then we want to discuss what are the critical issues that we're seeing. And those would be the goals of your strategic plan. So after that February session with you, we're aiming to leave that meeting with all of the content that Catherine and I need to go back and prepare your strategic plan for you so that we can bring something back to you in March. Just briefly how the strategic plan looks. And this is just a schema, if you will, to help you see how we lock all of these interlocking pieces together, connect them. And you'll have a vision and mission, your guiding principles. This isn't to say that you're going to have exactly 3 goals. You may have 4 or 5. May have more objectives or less. But again, this is just the overarching architecture of how we build the strategic plan that you'll see in March once we have the good conversations with you in February. Any questions on what the strategic plan will look like when we finish quickly before we move on here?
As you mentioned, besides the different terminology, it looks very similar to strategic plans that we've probably all had in the past. So thank you.
Good. Thank you, Madam Chair. I'm glad to get that confirmation. I figured as such. I'm not going to dive deeply into the roles and responsibilities today. This was just a reference for you to start thinking about how we use the language very similar to how you use your strategic planning language with just a couple of twists to it. We'll go over that more in February when we meet, but this is a shared responsibility. And so you can see here how we like to, especially for boards like you who have a goal of staying at the policy level, that we like to make sure that the governance, the value from the governance function is positioned in the right way, and the value from the management function or the staff function, if you will, is positioned in the right way. And so these are how these interlocking pieces flow together. It really is a baton pass. The things that are in the gray tend to be the things that are in your strategic plan. And then the bars that are in the white here, the rows in the white, I should say, strategies, action plans, those really are things that you want your staff to be thinking through. How are we going to do this? How will we implement? And what are the deadlines, timeframes, responsibilities? So that's really the baton pass between what we would consider a strategic plan and more of an annual action plan. It also would flow into a rejuvenated or updated board work plan for you. And that's represented here in terms of how we take the final product. And then, as I mentioned earlier, connect it back to some of your other governance practices. So I know there's a lot on the page, but again, focusing on the right-hand side, you have your annual board work plan and your meeting agendas, your operating budget, your executive director performance evaluation, evaluating your own performance as a board, and of course, succession planning and risk management. So these are all very essential governance practices that you have in your environment, and whether they're formalized or informal, and the strategic plan should inform that. Okay. One other point of consideration here as we get into thinking about the February offsite that we'll be having with you, and that is just to ask you to think as expansively as possible when it comes to your strategic plan. And for those of you who have engaged in this process before, I think this should probably be rather easy for you to do, but the boxes on the screen in front of you are important aspects of your operating model. When you think about MCERA, you have your plan and your communication programs and all the services that you provide to your members. The middle box, you are an employer of talent. You have people that work for you, that a professional staff that you employ, and you also have external consulting resources. And then as a board, you have your own operations. And when you think about strategy and what that means, we think about even at the board level, how things have changed with virtual meetings. Will that stick going forward? What's the best way to conduct your meetings? So those are some of the things at the board level, even board succession and turnover. Even though you have very limited control over that, what are things that you can do that are intentional to position you in the right way? What are things you can do that are intentional for your organization and also for your plan on the investment side, the actuarial side, the benefit service delivery side, and communications? So think as expansively as possible. How might things change over the next 5 to 10 years? How might we want to position ourselves? What things do we need to do? What capabilities do we need to have to be successful as we do that? These are the types of questions that we would ask you to consider. We'll be providing you with some pre-reads in advance of our time together in February. And the idea would be to help you to trigger some thoughts that will help you think through these broad areas, but then also bring those to the meeting ready to discuss and share with your colleagues as we work through those discussions. So that's really the essence of what we're about to lead you through. February 9th and 10th, we have on our calendars. We're very much looking forward to it. We know that things are uncertain right now and there could be some change with that, but we'll be ready to go and commit to serve you in whatever way that works out to be. We're very excited to be working with you. Strategic planning is one of our favorite things to do because there's just so much opportunity to be the best MSARA that you can be. And with that, I'll just conclude my comments, and Madam Chair would be happy to take any additional questions that the board might have. Thank you.
Thank you, Amy. I was one on the little ad force committee to look at the proposals, and I really am happy to hear the things that you have planned for us, and am glad that we have you on board with us.
Thank you, Madam Chair. We appreciate that.
Are there any comments or questions from trustees? We will be talking during the next agenda item about the offsite that we have been planning, so we will hold those questions. Well, if there are no further questions, then I will move on to this item number 8, discussion regarding administrative report, and ask Director Rentschler to lead us through her items.
Thank you, Madam Chair. To recap, with Katy's retirement, we are actually filling and recruiting for 2 positions here in the retirement system. One position was the retirement specialist position that was added with the last budget cycle that we had intended to fill the beginning of this year, hoping that we could have made significant progress on the correction project before we brought on staff for training. With Katy's departure, we'll be hiring for 2 positions. The update from Calipers is that the majority of their training sessions in 2022 will continue to be virtual. As far as the roundtables, they do have some in-person events anticipated, and if COVID permitting, they plan to move forward with a live event for the General Assembly in March. I believe yesterday was their drop dead date to decide whether or not they were going to meet in person in San Diego or change that to a virtual format. And I actually didn't hear anything yesterday, so I'll follow up with that. But registration is open for the Calipers General Assembly for trustees if you're interested in attending. Now to the strategic plan. We did attach a draft agenda to the administrative report. It's rather rough. There's a couple of places in there where we will flesh out based on some of our discussion today regarding educational topics for the meeting. Now, on January 11th and 12th, Mendocino County Health Officer released updated health order and a health advisory. The health order requires universal masking, and the order does include exemptions for persons actively engaging in public speaking at an indoor public event. So if we proceed with our meeting as planned in February and meet in person, our speakers can take off their mask while presenting for you. You don't have to try to listen to them through their mask, which I greatly appreciate because I wear hearing aids and I do a little bit of relying on seeing what people are saying, and the masks are a little problematic for me. So additionally, though the rest of us would be masked, we will have masks available for anybody who needs it. Those would be the recommended N95 masks. So the advisory suggests that groups over 12 be postponed or canceled, especially if individuals with health concerns who may be more impacted by COVID are expected to be in attendance. So they're also indicating that we would want to maintain as much social distancing as possible, and masking would be required. So as I mentioned, we will have N95 masks available for anyone attending the meeting. And I wanted to confirm if the board's preference was to proceed with the live meeting on February 9th and 10th. It would be held at Yokayo Ranch out, just north of town here, because the Hopland Agricultural Extension Center was already booked for the dates that we had, the board had expressed preference for. So Yokayo Ranch did confirm that if we needed to change the meeting, that they would apply the credit towards a future meeting, but the board's past preference and direction provided to me was that you were interested in doing an in-person meeting, and that is scheduled. I just wanted to confirm that there was no significant change to that. In addition to having the N95 masks available, we will make virtual attendance optional for some people if the trustee was not comfortable attending due to the current COVID situation. So I'll take any questions on this before I move on to any questions on the agenda. Trustee Anderson.
Thank you. I know a lot of, I believe you've used Yokayo Ranch before. I personally have not been out there. Is the meeting facility such that social distancing is something that's possible?
We are using the larger of their two meeting spaces, and I expect that we'll be able to provide social distancing. And then when we have breaks, etc., there is a kitchen area with seating, and then a deck, and we would be able to utilize those spaces also for additional distancing. And if it's a nice weather, even potentially eat outside on the deck or something and be able to open some doors there. It's not quite as large as some of the other spaces, but many places just aren't yet opening up to public meetings as far as rental of space. And I know there was desire not to have it, at the convention center or at a meeting room here in town, because there was a desire to kind of get out of the in-town feel and see some nature. And I thought Yokayo Ranch was a reasonable compromise on that.
Thank you.
Trustee Cromer?
Thank you. Just to confirm, in looking at the proposed agenda, I think it was mentioned and referenced multiple times in the previous documents as 2 half-day sessions, but from what I'm reviewing, that Wednesday is definitely a full day from 9 to 5. So I'm just confirming that I'm not misreading something.
We are having a 1.5 day strategic planning session. The morning of day 1 will have some educational components and some other items, but the portion that Mosaic is actually facilitating will be the afternoon of day 1 and the morning session day 2, that half day on day 2.
Understood. Thank you.
I think the documents too did specify that we would be having lunch on day 1 provided, and we would be having some coffee in the mornings.
That's correct. We'll
food.
have coffee and a little nosh or something available in the morning as a little bit of network time before the program actually starts. And lunch will be provided since that's a full day session on day one. It'll be like individually wrapped deli sandwiches that we have catered or pick up and bring in, to avoid any sort of like buffet line where we all have to move through the same space or touch the same utensils. Trying again to provide as much limitation of potential vectors of infection there by minimizing the buffet line type situation. So we might be changing the agenda up a little bit as far as the order of things, but we do have time for some educational items, one of which will be what the board asked us to bring back from the August meeting, which was a discussion again about the ESG rating models and how our managers incorporate that into what level, and whether the board wishes to address ESG in their investment belief statement or in the investment policy. So we do have that lined up for the morning on the first day. We'll do a small recap of our current strategic plan and the accomplishments from 2021. Additionally, we have time for another educational item. We have a couple of suggestions in the memo that I provided, which would be maybe a review of fiduciary duty or the key principles of effective boards. I have a board self-evaluation in there, but I think I'm going to pull that one and bring that topic back a little later in the year, and we'll do that. We'll have a board training calendar, and that item will show up on the board training calendar. And so I'd like to know if you have any preferences on the one labeled educational presentation 2, which will fill in with either one of these topics or a choice from the board.
So I think Doris, you really have 2 questions for us. One is if we want to continue with the in-person meeting on February 9th and 10th, which would require social distancing and masking, except for when we are eating, and hopefully the weather would be nice and we can get outside. So I think that is one question we need confirmation from the board on. And then the other one is, do you have a preference on the educational topics that Doris listed in her report and that she just went over right now? I doubt that we'll do all of them.
I would like to mention that Amy from Mosaic made a suggestion, and it might be too late to incorporate this year, but it might be something we'd like to do in the future years, which is actually invite the investment manager, the actuary, and our fiduciary counsel, and do a bit of a panel and get some of their input as far as where they see challenges arising for systems, whether it's the litigation front or actuarial changes or things like that. I don't think we would necessarily have time to try to coordinate that with the schedules of our different consultants, but I think that might be a great opportunity for a separate event or the next time the strategic plan offsite is undertaken.
Mm-hmm.
So let's start with the first question, which is the board okay with proceeding with the in-person event?
Thumbs up, thumbs down. Yes, Sherry.
Yeah, it's kind of in between. It would be lovely if we would have some of these restrictions lifted in time for February 9th and 10th. I don't know that that's going to happen. And I'm pleased to see we're going to go ahead at least with a meeting in person, regardless of the various inhibiting factors. I mean, I would have no problem pushing it back a couple of months and hope that maybe Omicron would have subsided a great deal. but I don't have a problem with meeting with masks either. So just consider me wishy-washy on this. I'm just glad we're going to do it.
Yes, Sherry. Have you frozen?
Sherry, you're on mute.
Sorry. I would prefer that we push it back where we didn't have to wear masks. Or does everybody have to wear an N95 mask? Is that what we're saying?
No, you can wear a mask of your choice, but the recommendation has been that people utilize an N95 mask. And I know that they can be a little expensive. And one of the suggestions was that departments have some sort of mask available for individuals who come in to transact business who may not have one. We bought a box or we got a box from the county of N95 masks that we'll bring to the offsite if anybody needs one, but you're welcome to wear any style you want.
Yeah, I would prefer to push it back myself.
Julie?
I just wanted to note the difference I see here with our Zoom meetings, being online, our monthly meetings, is that our chambers are small. And that's why at this time, we're choosing to have these Zoom meetings at the beginning of every agenda. And the difference with this strategic planning meeting, I guess this is how I view it, is that we have a different location that sounds like it's more wide open. I don't know how much public will attend. It sounds like it is open to the public, so I don't know that we're prepared for that, but I just want to make sure that that's the distinction of a separate location and why we would be meeting in person with a mask versus how we're meeting today.
Yes, in part, the only reason we proceeded with the in-person strategic planning meeting, which it was, the board's desire to do so in person, is that we could find a location that allowed us at least some distance, social distancing, because this room is much larger than what we have available here. It's not a huge room. I'd be more happy if it were even larger, but it's the largest space that they had available and that we could find that worked with the board's dates and other requests.
Quincy?
Thank you. I will speak personally for myself, and I'm not in favor of pushing this any further. If we have to abide by the health orders, we will. I know that I am available in February, but I can't promise much past that because of my schedule. And I know if we get closer to March, April, or May, or even the summer, that I will likely not be available. And I very much want to participate in this process because it will be my first strategic planning session. So that's my own personal conflicts potentially, but that's where I'm at.
We could proceed all virtual, but that has its own set of drawbacks in a way. I'm sorry, I think someone else had their hand up.
Thank you. I would be okay with meeting in person. However, I would feel awful if someone, felt uncomfortable. I'd want everyone that there'd be consensus that to meet in person, that would be okay. And I don't know about if, let's say, 2 or 3 people are not okay with that. What do you think about a hybrid where we have most of us in person and the people that don't feel comfortable could attend virtually?
Yes, I mentioned that. We will open this as a hybrid, so anybody on the board who is not comfortable attending in person or has some other conflict or reason not to can use the Zoom meeting just as we're doing here.
Trustee Jordy?
When we met at UK before, I believe we were both outside and inside. So it's an old lodge house, and they've got rooms. That the larger room does have windows, where our conference room doesn't have windows that open. And then the other is, I'm pretty sure we also met outside when we did our strategic plan there before. And just looking here in Fort Bragg today, weather's pretty good. So I mean, if it's nice weather, I hope we have plans that we could meet outside.
Trustee Anderson? I'm sorry, Doris. You're on mute.
Sorry about that. There is a patio deck space right off the room that we would hopefully be able to take advantage of, weather permitting, certainly for breaks or lunch, but also maybe during other parts of the meeting where we don't necessarily have to have everybody just sitting facing, directly forward to watch a presentation or something, but we do have potentially the option of utilizing that space if available.
With a hybrid meeting approach, our electronics would be problematic if we want to try to do part of the meeting outdoors and try to include everyone who's joining virtually. So I'll just say that could be an issue.
That is true. Thank you, Judy. We will be utilizing an owl, which allows us to pick up and focus on who's ever speaking around the U-shaped tables we'll have set up to facilitate the hybrid meeting structure. And we may have difficulty trying to incorporate any of the outdoor space for that. But again, it is there to be able to open the doors and also have our breaks or lunch there potentially, depending on weather.
Trustee Anderson.
Thank you. I would agree with the folks that want to move forward, and I think that it's timely. Certainly want to have Quincy engaged in the process as well, and I appreciate staff setting up the option for a hybrid because clearly this is a pretty significant surge. And you just look at the numbers and we don't know what they'll look like in 3 weeks, and it gives folks an option at that time.
I think that is a major consideration is, we don't know what's going to be in 3 weeks. So when we make a decision today, we're projecting, are we willing to go ahead with it in 3 weeks? And if we're able to meet in person, we go ahead and meet in person. I don't know what our deadline would be for postponing it as far as the facilities goes, but we do need to make a decision today about whether or not we plan to meet together on February 9th and 10th. So is that up for a vote, or do we want a thumbs up of let's go ahead with the dates we have? I know we heard some expressions of waiting, but you want to give a yay or nay on going ahead now? Thumbs up, thumbs down? Okay, I just see 4 of us, I think. Do we need to take a vote on this?
I don't think it needs a vote. It can just be direction. And I did see several people have their thumbs up, but they went down probably before you saw them. So it looks like the majority of the board, and from what I saw, was wanting to proceed with the in-person / virtual meeting.
Well, I would say, along with Jerry, I mean, it would be very nice if we could go back to pre-pandemic and be able to meet and talk and, have drinks and whatever in order to get to know each other better. But it's not possible right now. We don't know when it is going to be possible. So unless I hear otherwise, our direction to staff is then to continue. Oops, I see Julie has her hand up again. Go ahead, Julie.
Oh, I just wanted to say, I hope we can learn some things from this meeting and getting together with the technology that we have. I heard a reference to an owl, which I don't know what that is, but technology today is allowing us to have more of a hybrid model. So I hope we can have some lessons learned. So going forward, maybe we can discuss the board actually having a hybrid type model, because I'm not sure that, we can continue to be closed as we have for almost 2 years now, and we need to look at a new normal and different practice. And so hopefully we'll learn something through this, how we can manage a hybrid model. So.
I agree with that. I think one of my frustrations this morning being on Zoom is that when somebody takes over the screen to show their presentation, then I can't see everybody and I can't tell whether hands are being raised or whatever. I know some of you have 2 monitors up, so you can do both things at the same time, and I don't have that capability, or I don't have that right now. So it's tough. There's better ways to do it, and I know people are learning how to do it better every day with the hybrid model. So okay, well, I will, Jim, another one. Yes, Trustee Anderson.
Yes, thank you, Madam Chair. The only thing that that I've heard that gives me some pause is that the comments made by Mosaic that Doris echoed of having our actuary, our financial advisors, and fiduciary counsel there. To me, that sounds so much more valuable in strategic planning than having an ESG or some other type of educational program for the day. And I don't know if there's some way when they go off to do a draft plan, if there's some point in the future where those folks can participate and maybe help us really raise their focus or perhaps bring up something we haven't seen, because that's an awfully important group.
Yes, and if I can address that point after Amy raised that in an email to me, I said that we may not have time to arrange that for this meeting, and she did indicate that they could, or I could, or we could together reach out and sort of query the investment consultant, the actuary, and counsel to find out what they think the board should be considering for the strategic plan in lieu of doing an actual panel. I'm happy to try to arrange a panel to see if I can get the a representative from our actuarial firm. Callan might be available because we were talking ESG, and of course they might be able to participate remotely. They wouldn't necessarily have to come in person, and maybe our fiduciary counsel or Mr. Beck, if he wants to opine on issues that might be facing pension plans, and I can try to put that together for this meeting if you would like. I know that we're getting a little short on the time frame, and she just made that suggestion yesterday. But that's something that with virtual attendance, it might be easier now to accommodate than it would have been as having them come in and do a live panel. But if you would like me to proceed with that, she had a time frame agenda for her portion that still left some time in the morning of day one for us to do some other educational and activities with the board. And again, I just want that direction, whether you want me to try to arrange that. If I can't arrange that, would you like the presentation on fiduciary duty? I think it's been a couple of years since Jeff has provided something like that to the board in the past, or if there's another topic that you'd like to drop into that time slot that we have available for an educational option.
If we have virtual presenters of any kind, will that be a screen up where we can all see them if we're sitting in the room and there's a virtual presenter?
With the OWL that I mentioned, which is really a camera mic system that's portable to allow you to facilitate an in-group meeting with virtual attendees. Okay. That would be projected, and we'll take our projector. They have a screen there. So you would see a screen that would be comprised of basically a picture from the OWL, and the OWL moves around their microphone and camera, although you don't see it, to the person who is speaking. It moves automatically, and that would be on the screen along with the other individuals who have dialed in remotely.
Okay.
That's good.
Julie.
We only tried testing it once with limited success, but this will be our first full-fledged attempt at using the OWL.
Okay. Julie?
Just further discussion on possible putting off the meeting to a later time, so it's safer for our members to attend. And so we can have that maybe outreach to the retirees and stakeholders and the employee unions to be able to have more of input here. So I'm not sure that outreach has been done. And so considering a safer time where they might be able to attend, or even to allow that time so we can reach out to them and get some feedback. I guess that's my concern for the February 9th and 10th dates. So I just wanted to float that out there again and see, you know, how urgent is this for us to proceed in February, that we shouldn't take some more time and consider, you know, where it's open to more attendees, and so we can reach out to our stakeholders.
I would ask the question of whether we have the format and the questions available to reach out to stakeholders at this time, or whether we need to go through a portion of the planning process in order to know what to ask the stakeholders.
I guess I envision sort of a survey or a query sent out to them that they can respond to. I imagine we have all their contact information, and it can be more open-ended and not specific. So we can have that feedback at least prior to the meeting, or have available for them to bring their thoughts and prepare ahead of time for strategic planning.
And the meeting is open to the public. It's a webinar format like this one. So we will also be allowing participants to participate via the webinar and make public comment. And we can certainly, you know, solicit input. As far as a survey, I would want to get more direction on specifically what you would like to be, you know, those groups to be queried on. I mean, we have our you know, plan sponsors, and Robert has been working out and reaching out to them and discussing things over the years, and we can certainly reach out to our plan sponsors. We could reach out to union leadership or membership at large, but again, we need time to set up the mechanism to broadcast that or make some sort of survey available. And then of course, specifically what the survey questions are, which might require some additional time. How you structure a survey is very important in determining the quality of information you get back. And I would want some feedback and direction on specifically what you want to pull in here.
Kathy.
Yeah, where do we go from here? Oh, Jerry.
Kathy.
Yes, go ahead.
I guess I would like to see us walk before we run. For many of us, in fact, for all of us, this is a new board. We've had so many changes. We've really not looked at the beginning steps of strategic planning. And I'm not saying there shouldn't be a survey to reach out to the members as a next step. But we've had 2 years where we haven't even been able, you know, to shake each other's hands. We've been deeply embedded in the project, but hopefully the project isn't going to be the end of the board, it's the beginning or a part of the beginning. And I don't think we're ready to send out a survey yet. I think we need to take those integral steps that will lead us to the type of consensus that makes this board the kind of board we want to be, and the kind of staff and the interactions between the two. So Doris is new. I would hate to lose Quincy. I know how tight his time is, and I appreciate his saying so, but I'd really like to have him be a part of this. I think we need to get together and try to see what our direction is for the future. So I'm sorry. this is on my lap and it keeps slipping off. So I would like to see us get our foundations first, and anyone will be able to see what we're doing, and members will be able to formulate their questions as well for the next step of our planning. But let's walk first.
And potentially, kind of headed that direction, Jerry, potentially one of our objectives and strategies and next steps and action plans and whatever the titles will be on our plan could be to reach out and, one of our goals has been, 95%, what is it? Not acceptance,
Approval.
but approval, yeah, whatever. Reach out. That could be part of our steps that we come up with. I do think, I do agree with you, Doris, that doing a questionnaire takes a lot of thought and planning in order to word things right and in order to ask all the questions that you want to ask. There could be an informal gathering of information just among your own constituents before you come to the meeting. I'm personally in favor of moving forward and taking this first step because I'm not quite sure what all the steps should be. So I'm willing to take the first step and then move on from there. But I'm not sure we have agreement on that. Doris, you said you saw enough hands a while ago, but I'm not sure whether they're still there.
Well, if you want, you could ask the board again to express their preference, whether they, give you the thumbs up or they use the raise hand or the thumbs up signal on the icons available within Zoom. If you or go ahead and take a roll call so you have a good count. But this technically doesn't require a vote. It is really just direction from the board.
Right. Yeah, and I haven't found my thumbs up on my Zoom lately. I don't know where it went.
No, I don't know where
I had it at one time, but I've got the raised hand, but I don't know where the thumbs up is. It used to be there. So anyway, thumbs up so we can see whether you want to have the retreat on February 9th and 10th. And I'm going to say yes. There's a Jim, yes, and there's a Jerry, yes, but I don't see.
I see 7.
Okay, I don't see that. Why am I not seeing all these things?
Are you, well,
Quincy's frozen. So it might be my
he's still there.
It might be my computer problem. So
I'm just very still. I'm here.
Okay.
Yeah,
Okay. All right. Okay. Well, if you see 7, thank you all. I just couldn't see it. Some of the times you guys freeze, so it's probably my internet connection. So that being said, even though we're not all excited about meeting in person with the social distancing and the mask and everything else, we want to move forward and get the first step done. And so then the next question would be, how do we want to spend that morning on educational topics? And Julie, yes, you had something to add, I think.
I just wanted to say thank you for your comments about including the membership, and I know we're moving forward. Just hoping that if at the very least we can float out the existing vision statement, mission statement, and our guiding principles to our membership and see if they want to review that prior to our meeting and provide some feedback, whether it not be a survey, but really just make sure we send an invitation and our existing documents for review. And if they want to provide feedback, then we can maybe incorporate that into our planning. So that's all. Thank you.
Thank you, Julie. Jim?
Yeah, I was just going to say to Julie, and I appreciate your comments. And I think it, as has been stated already, it could go to being one of the objectives is engaging with our members and seeing their level of satisfaction or suggestions they may have. That could come as one of the objectives. Also, as I think the consultants noted, is that that may be a significant issue we discuss when it comes down to whether or not we do a 3 or 5 year strategic plan. It may be, as Jerry said, we start taking some steps, but we shorten the time frame until we do this again.
Thank you for your comment, Trustee Forrester. We do have a newsletter if it hasn't actually already gone out, because it will be going out this month. I'll add a brief article about our current mission, vision, and guiding principle statements, and what our past or current objectives are, and solicit feedback via email or phone calls, and mention the webinar meeting that they could participate and make public comment at, if that would be acceptable. I'm waiting to find out if it's too late for me to add anything to the newsletter, but I think I still can. If not, I'll do something separately.
Thank you. Appreciate that very much.
Yes, thank you. Yes, Trustee Cromer.
Thank you. And I think that would be the best plan of action with the current climate of some of the situations with the projects that are undergoing, because I think some of the last communications our members have received were quite troubling to them. So if we're sending direct correspondence to members, I would hope that they know what's coming to them. And because some of those were quite surprising in the last year, and I don't want to have another negative impact on some of our members that have already had some of that negative communication, I guess. I don't know how else to word it, but bad news. I'll just leave it at that.
So as far as the activities for the morning of the 9th, did I hear, I won't say a consensus, but I heard a majority of people maybe expressing interest in seeing if Doris might be able to get some input from the actuary, the attorney, and Callan, is that correct?
Yes, I'll reach out to them and see if I can get an agreement for them to attend virtually, and we can do a brief panel to incorporate in the morning as far as challenges and areas where they think that pension boards should be focused, and we can hopefully then sort of incorporate some of their feedback and perspective into development of the SWOT analysis and ultimately the output for the plan.
Okay. Do you have the direction you need now, Doris?
If I have some time available, and since I haven't heard anything specifically, we may end up adding the presentation on fiduciary duty or governance or something. I'll just pick one at random of what we have ready to go, to make sure we have some items that count towards your educational commitment and requirements, and that we make use of that morning time frame.
Okay.
So it's your last chance. If you really don't want to hear, something on governance or fiduciary duty, now's your time to speak up.
I love actuarial presentations. They're so exciting.
Can we take a break after this item?
Well, and I'm sorry, I was thinking we'd take a break a while back. I didn't know that this item was going to take so long.
I
So,
do apologize.
yeah, no, you don't need to apologize. So are you done with everything on your report, or
I
do
am.
you want to mention anything? Okay. Then all in favor of taking a little break, thumbs up. We'll just make it a very short one, if that's okay. I've got 10:50, right? So come back at 11. Is that okay?
Sounds good.
All right, see you at 11. Address anything else on your agenda, your administrative report? There was a director's
Sackers
election.
items attached regarding the upcoming Sackers election and the Sackers legislative update. If you have any questions, I'm happy to address any questions, but we'll have, I believe, the Sackers Board of Election information request for nominations deadline is March 8th, if I remember correctly. I don't look at it. I don't have it in front of me, but I have nothing else to add. Thank you.
Okay, thank you. And we will move on to agenda item number 9. And I will introduce this one myself. Last year, the evaluation of the executive director was done per our policy. And in the policy, it says that the chair and the vice chair will coordinate that. So that last year was Dan and myself. And through the responses that we got and my own questions about it, there were some, not concerns necessarily, but some questions about whether or not we could improve this policy and improve the questionnaire and the forms and that. So we wanted to look at that again. So I would like to have an ad hoc committee volunteer to help me with that. Richard's not here. I would say as vice chair, I would want him to be involved in that as well, since the policy says that. And we would be looking at things like the charter for the executive director and the evaluation policy and the forms that we use. And then we would bring back any suggested changes that the ad hoc group might come up with. We would bring those back to a future meeting and have a discussion with the entire board. So I'm looking for volunteers who would like to look at that information with me.
Don't all jump at once.
Kathy, I would just say that if you're looking to maybe approach Richard, is that the only reason I'm not jumping in is that having 2 retirees on there, you may want to look for other membership representation.
That's a good point.
Thank
I will
you,
ask Richard. Yeah, Richard did have some comments last year. I don't know how many of you remember the conversations, but some of the forms, the items were all aggregated together, and Doris did an exceptional job of breaking them out on her self-evaluation, but the form that we filled out doesn't allow us to do all of that. So we want to look at some of that. And Richard was one of the folks who noticed all that. So I will definitely approach Richard. I'd like to have one other person if I could, if anybody else would do that. I don't want to pinpoint anybody, but.
Chair Smith, I would volunteer. My only hesitation is, well, this strategic planning that we're having takes more time away from my daily employment and functions that I have going over the next 6 months are going to be greatly involved and time consuming. So that's my only hesitation to volunteering and taking on another process. So I'm sitting back if someone else.
No problem. Let me approach Richard and let me see.
Kathy, if no one else will do it, I would do it.
That's
but I'm a retiree also.
Yeah. Yes, I know. Okay. Yeah, that's fine. Let me approach Richard and see if we need to strong arm anybody else, but I appreciate that. One way or the other, whether it's me alone or somebody else, I do have some suggestions for moving forward. So we will get the ad hoc committee to come forward with a couple of things. So, all right, thank you for that. So we are now on to item number 10, general board member discussion. So this is the time that you can input anything that you've been doing on behalf of the board or anything you would like to let the board be aware of. Okay. I see no comments there. I would add just a comment that I made to Richard or Robert online the other day, was just that I finally had a chance to look at the annual comprehensive annual report. I can't say it right, financial report. Used to be called a CAFR, and I haven't gotten past that yet. But anyway, I thought it was very well done, very professional. I know that we have earned the award for that report for years, and I hope that we do again this year because it was very well done. And I thank Robert and Doris and whoever else worked on that. Appreciate it. So at this point then, I think we're ready for closed session, and we do have an item for disability consideration. So we need to go into closed session.
And give me just a moment to prepare the meeting for that.
Absolutely.
In closed session, the board considered the disability retirement application of Elizabeth Valentine and voted unanimously to grant her a service-connected disability retirement.
Thank you, Jeff. And thank you all trustees and staff. If there's no further business, I guess we can announce the meeting is now adjourned.
Nice job, Madam Chair.
Thank you.
Thank you, Kathy.
Take care. Bye, guys.
Everybody.
Bye.
Bye.